Hi, my YouTubers, my scholars, my students. Please like, subscribe, and share. This is Teacher Party. My YouTube channel is Accounting with Teacher Party. Okay, so I'm continuing. We've done assets now, we've done expenses now, we're doing income. Okay, so what is income? So I have to be very technical with income. So what you have here as part of the definitions and everything, it's according to IFRS and IAS. So this is not my work. So that's why I've quoted where it comes from. It's quoted verbatim from the IFRS IAS frameworks. So please, I needed to get this technically correct, because if you look at IB question papers for grade 12, this starts featuring. There'll be something that you don't understand how they got this amount, especially when it comes to income. I think there was a case where the company ordered goods, but the goods were not delivered by the supplier, or the truck broke down while it was bringing the goods, and the goods could not reach the premises. And now the recognition of that transaction, it was heavily embedded in the definition of income according to IFRS 15, because the transaction, as much as the money was transferred, but the service was not performed fully, so that income ended up being deferred because the company could not fulfill their obligation in full. So if you've not done IFRS, sometimes you're going to feel like they're out to get you. You should be immersed in accounting standards. You should not start doing focusing on accounting standards when you're in tertiary. You should do that as early as possible. Accounting students, it will help you. So what is income? According to IAS, income increases the economic benefits during the accounting period in the form of inflows or enhancements of assets, or decreases of liabilities. So enhancements of assets. So in that sense, it would be if it's a plant that is producing certain quantity of assets, and then it gets a revamp, and then it performs much better than it used to perform. They're talking in that sense. But also, what I want to bring to perspective here, it can also be profit on sale of an or profit on sale of an asset, or the increased profitability, or the increase in production of goods to be sold because of an enhanced what performance of an asset. So if an asset used to produce 100,000 goods for sale, and now that it has been enhanced, it produces 500. So the 400, it's the increase that has been caused by the enhancement of an asset. Or sometimes it can be because of a decrease in liability that results in increase in equity, other than those relating to contributions from equity participants. So that's your dividend income, etc. So I had to get this from the IFRS. So IFRS 15, the one January 2018, it's very specific how and when you recognize income. So there must be a contract between two or more parties, that is revenue from revenue contracts from suppliers. So no, man, revenue contracts from customers. I'm like, no, there's something I said wrong. Revenue contracts from customers. Ne? There must be an agreement between the two parties that relates to enforceable rights, obligations. There must be a customer, there must be the income. So there must be value that's going to be received in the whole process. And the goods must be delivered, transferred to the customer. This is very critical. So this is it also touches on revenue, which is income arising from the cost of an entity's ordinary activities. If it's a law firm, those are consulting fees. If it's a grocery store, those are sales from selling goods. If it's a saloon, those are your beautician fees, etc., etc. Transaction price is the amount which the entity expects or is entitled to receive in exchange of the goods and services. So that amount must be agreed to. So there's 5 steps according to IFRS 15 that has to be implemented in order to recognize revenue. First, identify the contract with the customer. So the contract must exist. Identify the performance obligation in the contract and determine the transaction price. Allocate the transaction price to the performance obligations in the contract. So there must be delivery of the service, and then recognize revenue as the entity satisfies the performance obligation. Application of the guidance will depend on the facts and circumstances present in the contract with a customer and will require the exercise of judgment. So now, guys, now that you're very clear what income is, according to the technical accounting terms, this will make your life easy, very easy in accounting. So we're quickly moving to the income examples. So you've got your revenue from goods sales or service fees, that is your sales income, interest income, rent, dividend income, commission income, provision for bad debts adjustment, trading stock surplus, royalties, discount received. So the bad debt adjustment can also be an expense depending if you're dropping from the provision that was higher to lower or from lower to high. Okay. So that is it. So if you need to be in contact with me, I'll share my contact details. So there you go. Those are my contact details. Drop me a WhatsApp, send me an email, and tell your friends to subscribe, share, download the video, play it over and over again. It's free. It's just meant for you to succeed in your studies. Thank you so much.